Welcome, ladies and gentlemen, to Commodity TV and the new interview edition out of our studios here in Switzerland. And for the first time, I have mining financing legend Warren Gilman here, who is the founder and CEO of QRC Capital out of Hong Kong. Welcome and good morning, Warren. How are you?
Thank you, Joachim. It's a pleasure to be here. Thank you for the invitation.
Yeah, thanks for taking the time. And I was quite impressed. You just did a presentation here in St. Gallen. And what I heard, I must say, wow, I think I should buy some stock. That's really interesting. But QRC Capital, the company is totally new to our viewers and also investors. Maybe you give us a short idea about the company.
Yeah, we are, Joachim, as you heard this morning, we're an investor in the mining industry. I'm a mining engineer. I'm a lifelong mining banker. And then I spent 10 years investing for Li Ka-shing, one of the world's richest men. Started QRC a couple of years ago as a mining investment company. But we do it a little differently. We focus on investing in convertible debentures. These are securities that pay us interest every quarter. So we get income that comes into the company, which we then in turn dividend out to our shareholders. So we have paid a dividend every year since we started the company 3 years ago. And then we maintain the conversion feature as our upside to have an opportunity to participate in the explosive growth of the commodity business. But we do it from a very safe base. We have debt securities, not common shares of the companies we invest in. So our downside is protected. We do not lose the money we invest in. We earn income, we pay a dividend, but maintain unlimited upside exposure to the companies that we invest in. So it is that structure, that philosophy that makes us different as a safe way to invest in the commodity sector that you have been investing in for so many years in your life, and you've experienced firsthand, I'm sure, the volatility. You can make a lot of money, but you can lose money. And you can go for several years of having a down cycle. It's good to know, it's good to have the peace of mind that in down periods, you are protected. Your downside is protected. You will not lose the money you invest. You'll earn a dividend, but when things turn, you get that exposure.
Absolutely. And I think it's also interesting, as I heard it in your presentation, you do always 130% of the, let's say, underlying share price when you do a convertible. So it's less dilutive for shareholders, right?
It's less dilutive for the companies that we invest in. So smart CEOs understand the value of the money that we bring. It reduces significantly the dilution that their shareholders would have otherwise experienced by doing a straight equity issue on the stock exchange, which they'll have to do not at a premium to market, at a discount to market, and then pay 5 or 6% to the broker, to the bank that's raising the capital. So it costs the company 15, 16% or more versus a convertible debenture with us, which converts into shares at a 30% premium to market. So for CEOs who actually value the number of shares they have outstanding, doing a convertible debenture with us is a no-brainer. It makes perfect sense. It reduces dilution to their shareholders.
Yeah, absolutely. What is, let's put it before I come to the question, what is about the maturity? Because I expect you do it like 3 to 5 years, maybe, the whole structure. But can you convert anytime?
Yes. Our convertible debentures, the length of time that they take to maturity varies depending on the country of the company that we're investing in. In Canada, we do 5-year convertible debentures. That ensures that there is no withholding tax on the interest that comes into QRC. So it comes in tax-free. So that's very important. Other jurisdictions like Australia, we do for 4 years. So our convertible debentures tend to be 4 to 5 years in terms of maturity. But we can convert at any time at our option and any amount. If we have a $10 million convertible debenture with a company, tomorrow I can convert $10,000 or $100,000 or the whole 10 million. It's totally within our decision-making capability and our rights. And we have that flexibility if we need capital.
And you have full collateral?
We are always the top ranked in the companies that we invest in. We are a debt security. We're not, so we rank above common shareholders. Oftentimes, we are an unsecured convertible debenture, but we have rights that prevent the company from issuing any other convertible debentures or issuing any other debt without our say-so. So if they want to add debt, they have to come to me and ask permission. So we can always maintain, we always have the choice of maintaining our superior ranking in the capital structure. So if anything ever went wrong, we're the only guys standing. We're the guys who rank above all the common shareholders. We can often agree with the company to change that. If they need to raise money to build this mine, and that's what we want to do. We want to help companies build that mine. We are more than happy to step aside and subordinate. If we choose to do that, we ask for more money. Okay. So we get paid. And I'm more than happy to do it as long as the deal makes sense. But I get to look at it.
Super. But that means you, meaning your investment, but also your shareholders, are extremely well protected. Because even if it fails and goes bankrupt, you get
I am the top ranked man in the totem pole.
That's what you want to have.
And so ironically, I always say, you know, I don't wish any of these companies ill, but if for whatever reason we ran into a commodities down cycle and these companies couldn't afford to pay me, I would gladly take the ore body and own it myself.
And monetize it,
I would gladly, ironically, that would be a wonderful thing for Queen's Road shareholders.
Absolutely. What are your main criteria that you step into an investment, meaning that you really give a mining company $25-50 million?
Yeah, that is a great question. That is the underlying, now that we've established the structure, I'm going to do a convertible debenture for the reasons that we've just described. Unlimited upside, but downside protection and income. Now, who do we give that money to? First of all, it's got to be in a safe country. There's no sense investing in an ore body in some, as Mr. Li Ka-shing, who I used to work for, he would refer to them as funny countries. And it has to be stable. No sense investing that's stable now, but 20 years from now, and these ore bodies will all last 20 to 50 years. If 20 years from now they can take it away from you, what's the point? It's got to be a stable country. I don't care what the commodity is. It can be uranium, it can be silver, it can be gold, it can be copper, nickel, but it can also be other metals that people have never even heard of before. Doesn't really matter. I'm not focused in one area. I will go where the best opportunity is and the best return for my shareholders is. So that might be in some funny metal that you've never heard of before. I really like those opportunities. But thirdly, the most important thing, it's got to be top of class. It's got to be the best ore body in its field. So if I'm looking at a copper ore body, I'm not going to do some marginal project in Colombia or Arizona. I'm going to do a really high quality project that the majors are going to want to buy. Uranium. You look at the uranium investments that we've made into companies like NextGen
Top notch,
and ISO Energy. These are the best ore bodies in uranium by far in the world. And we are the only convertible debenture holder in those companies. We are the only debt in those companies. So very simple. Great ore body in a safe place. And it doesn't matter what the commodity is, I'll look at it.
Okay, super. Your company has 3rd anniversary. I think it's even today, right?
I think it is today.
22nd February. Congratulations on that.
Thank you.
And what really astonished me, and I was really happy about to see, you paid already 2 times a dividend.
Yes.
That's not normal.
Yes.
So what's about this year's dividend?
At the end of our first year, how many companies do this? At the end of our first year of operation, we paid a dividend. The end of our second year, we paid, which just passed, we paid our second annual dividend. a 13% increase on our first year dividend. At the end of this year, our third year, we will pay another dividend. We will pay a dividend every year, and it will be higher than last year's dividend. We will establish a track record of increasing dividends every year. And that's just the nature of the model. As our portfolio of convertible debentures increases, more income comes into the company. And I've told my shareholders, everything that comes into the company in terms of coupons, after we pay for the modest operating costs of running the business, and I say modest, we have 3 employees, I'm one, and there are 2 others, and that's it. All of the rest of that income gets dividended out to shareholders. So as our portfolio increases, we started our first year with 0, and at the end of our first year, it was 45 million in converts. The end of our second year, 100 million in converts. The portfolio is growing at 50 to 100% a year. The end of this year, maybe our portfolio is 150 million. Well, that's an extra $5 million that comes into the company that gets dividended out. So I know that I will be paying a dividend at the end of the year.
Okay, super. That leads me to the questions. You were talking about shareholders already. What are you owning personally?
Yes.
Because I could imagine you want to profit also from a dividend payout.
Yes, and I pay cash for my shares.
That's important to know.
And I participate in we've done 2 financings, and I've participated in both of them. I own about 8% of the company, which makes me about the 5th largest shareholder in the company. We have very supportive shareholders. The top 6 shareholders own about 85% of the company.
Wow. So it's in safe hands.
It's in very
strong hands.
They're all billionaires. They're all self-made billionaires. They're all very, very astute people. They know me well. They really like the model. And they have never, ever sold a single share. They have repeatedly invested in the company. They've been very loyal shareholders. We have what we call a DRIP, a dividend reinvestment plan. So you can choose at the end of the year to receive your dividend in cash or in more shares. Last year, our participation in the DRIP was 90%.
Wow.
90% of our shareholders said, Warren, keep the cash. You can do more with the cash than I can. And they're all billionaires anyway, so they don't need the cash. They said, Warren, we want more Queens Road shares. So give me the dividend in shares, and I'm going to keep those. So they just keep building their position each year, just trying to get more and more Queens Road shareholders. Wow. When we had our AGM a few weeks ago, 100% of votes were in favor of all resolutions. Who gets 100% of all?
Not that I know.
We got 100% voting in favor of the resolutions that we put forward. So it's just a reflection. Both cases are a reflection of the support of the shareholders that we have. Hopefully after our breakfast this morning and our lunch this afternoon and our future meetings, we'll get more and more European shareholders. We're just starting.
Hope so too. Fantastic. Final question. Where do you see your company in 3 years?
3 years. Will probably be about 10 times larger than we are now.
Wow.
We're a $350 million company listed on the Toronto Stock Exchange now. I see no reason why 3 years from now we shouldn't be a $3 billion company paying a substantially higher dividend. You can imagine if we have a portfolio that's that size, the amount of income coming into the company and the dividend that we'll be paying by then. But this is a model that benefits from economies of scale. We don't have to have many more employees. People like to talk about royalty companies and streaming companies. I think our model is better and even more efficient. We get paid our coupon whether the mine is in production or not. So I have no reason to believe this will not be a company substantially larger 3 years from now, 5 years from now, 10 years from now.
Okay, super. Warren, all the best for that. Thank you very much. Please keep us posted and updated. I really like what I heard. I really have to consider to buy some shares.
Thank you, Jochen. A pleasure. And we will come back and see you.
Super. Thank you very much. Yeah, ladies and gentlemen, there was Warren Gilman, the founder and CEO of Queen's Road Capital out of Hong Kong. Yeah, you heard it. Not a new actually, but a great financing model with convertible bonds for mining companies to bring them into production, to really develop great assets. And Warren is so long in the business, he absolutely knows what he is doing. For sure, he had so many successes in his history. But also, I think that every project he's doing, every company he's doing, they have the full collateral. And that's super important because all the time something can go wrong in mining. Mining is adventure, we know that. But when you have the collateral, you can grab the ore body and then you can monetize it. So if you are getting a shareholder of this company, you will invest in at least 10 to 20 mining projects, in the future maybe even more. Mm-hmm. You will have an income from interest. You have the upside from the exercise in the equity in the convertible, and that's exactly what I want to see. I like the company. Check it out. Thanks for watching us, and bye-bye from Switzerland.